Welcome to the Deep Dive. Today, we're putting on our Talk Takers hats again.
That's right.
And we're going to zero in on a really critical event for investors. The Q2 2025 earnings call from Amgen, the biopharmaceutical powerhouse. Our mission, like always, is to cut through the noise, pull out the most important insights, and, help you get truly well-informed fast.
And there's a fascinating puzzle here today, isn't there?
There really is. Amgen delivered what looks like an undeniably strong quarter. I mean, the numbers are good.
Yeah, on the surface.
But the market's reaction, surprisingly muted.
Right.
Almost indifferent.
Right. So the big question is, why the disconnect? That's what we really need to unpack.
Exactly. Earnings calls, they offer this treasure trove of info, but man, they can be dense.
Especially in biotech. For a company like Amgen, operating in such a dynamic sector, you really have to understand the nuances, beyond just the headlines.
So we'll be dissecting their performance, looking at the strategic shifts they're making.
And really trying to get a handle on the market's immediate read. We want to tell you not just what happened, but why it seems to matter, or maybe why the market thinks it doesn't matter as much.
Perfect. So if you want to understand what really drove Amgen's quarter, what it signals for their future, and maybe why investors kind of shrugged instead of cheered, you're definitely in the right place.
Let's dive in.
Okay, kicking things off with those headline numbers from Amgen's Q2 2025. They reported non-GAAP EPS of $6.02.
Which absolutely crushed the consensus estimate. That was what, $5.28?
Yeah, $5.28. So that's a $1.74 beat. A really robust 14% upside. And
just quickly, non-GAAP, that usually adjusts for things like acquisition costs, maybe some accounting stuff, right? Gives a cleaner view of the core operations. Exactly. It's what most analysts focus on. Yeah.
But it's also worth noting their GAAP EPS, the standard accounting number that saw an impressive 92% jump year over year, landing at $2.65. Shows some real underlying strength.
Okay, and on the revenue side?
They delivered $9.18 billion. That surpassed the consensus, which was $8.94 billion.
So about a more $0.24 billion beat there, roughly 3%. Still solid.
Yeah, and it translated to a strong 9% year-over-year revenue growth overall.
Right. So you hear those numbers, big EPS beat, solid revenue growth, you'd think the stock would pop.
It would, but the initial market reaction, it showed some caution from investors. The stock actually dipped slightly after the call.
And critically, the trade volumes were notably lower than average. It wasn't like a panic sell-off or anything.
No, not at all.
But it certainly suggested, let's say, tempered enthusiasm. Like the market wasn't quite buying the headline story.
It's quite the paradox, isn't it? Great numbers on paper, but the market seemed to be looking for something else, or maybe focusing on specific worries.
Which means we need to peel back the layers a bit.
Okay, so let's get into what actually underpinned those impressive numbers. Management really emphasized volume growth.
Which is key.
Yeah, they called it a key differentiator, especially because the whole industry is seeing net selling prices decline. Competition, pricing pressures.
Right, so volume is where you have to win right now. And Amgen.
They didn't just deliver, they really excelled here. An impressive 13% volume growth. That's what powered that 9% product sales gain.
13% volume growth. I mean, that's not just a good quarter. That's a strategic win in this kind of environment. It shows they're getting more product to more patients, really outmaneuvering competitors.
And what's fascinating is the breadth. It wasn't just one or two drugs.
No, 15 products hit double-digit growth. 15.
Wow.
You saw big gains from established blockbusters like Repatha, up 31% year over year to almost $700 million.
$696 million.
Yeah, and Evenity surged 32% to $518 million. Big numbers.
And that Horizon Therapeutics deal they did last year, clearly paying dividends now.
Absolutely. Assets like Uplizna jumped, 91%?
91% to $176 million. And Tepezza was up a solid 5% to $55 million.
And get this, those acquired Horizon assets, together they contributed fully half of the quarter's incremental growth.
That's huge. Shows the integration seems to be going pretty smoothly.
Yeah, management sounded confident. They reiterated capturing synergies, seeing double-digit product growth from day one from those assets. It really reflects a strategic pivot for Amgen. They're going on offense, building scale.
Instead of just playing defense.
Exactly. Which is important because they are facing headwinds elsewhere.
Right. That's the other side of the coin. Prolia sales, for instance, actually declined 4% to $1.12 billion.
Primarily due to lower net selling prices, right? Biosimilars hitting the market in the U.S.
Yep. And Enbrel saw an even bigger drop, down 34% to $0.60 billion.
Ouch. And that's hit by biosimilars too, plus something they call Medicare remix.
Which basically means what? A shift towards more government-paid patients, lower reimbursement?
Essentially, yeah. So the fact that Amgen can offset these pretty significant pressures with such strong volume growth elsewhere, that's really a testament to how diversified their strategy is.
Including their own biosimilar portfolio, right? That's growing fast too.
Oh yeah, remarkably fast. Their biosimilar sales grew 40% year over year, hit $661 million.
It really highlights what they call their bifocal strategy.
Bifocal, I like to.
Driving innovation with new drugs, but also competing hard with follow-on products, the biosimilars. This seems pretty smart in today's market.
It does. It covers both ends.
Okay, so looking ahead, Amgen clearly feels pretty good. They raised their full year 2025 outlook.
They did. Revenue guidance is now $35 billion to $36 billion, and non-GAAP EPS $20 and $21.30.
And a huge driver for that optimism, and really the whole future growth story, it has to be the pipeline.
No question. And the spotlight there shines brightest on MariTide. That's their big obesity candidate.
Right, the GLP-1 space. Huge potential market.
Massive. Phase 2 data showed around 20% weight loss, which is, impressive. But the real insight with MariTide isn't just the weight loss number itself. Lots of drugs do that.
So what's the differentiator?
It's the improved GI tolerability they're reporting, and crucially, the potential for monthly or maybe even less frequent dosing.
Monthly or less frequent. That would be huge for patients.
Exactly. Amgen is betting on patient persistence. Think about it for a chronic condition like obesity. If a drug is easier to tolerate and you don't have to take it constantly.
Adherence goes way up. People stick with it longer.
Right. So this isn't just about efficacy numbers on a chart. It's a play on the real-world patient experience. If they pull it off, it could let them grab massive market share by being the preferred long-term option. It could really shake up that whole projected $150 billion GLP-1 market.
And they're putting their money where their mouth is. They've started 2 more phase 3 studies for MariTide already.
Yeah, one looking at cardiovascular outcomes in patients with heart disease who are also obese or overweight.
And another for a specific type of heart failure in obese patients. Plus, an obstructive sleep apnea study is starting this year too.
They see a very broad application here. It's not just weight loss.
Okay, beyond MariTide though, the oncology pipeline looks pretty robust too.
It did. Tarlatamab really stood out. That's a first-in-class DLL3 targeting BiD molecule.
Okay, BiD. Break that down quickly.
Sure. BiDE stands for bispecific T-cell engager. It's a type of immunotherapy. It kind of acts like a bridge. It grabs onto one of your immune T-cells and also onto a cancer cell.
And brings them together so the T-cell can attack the cancer.
Precisely. And DLL3 targeting means it specifically looks for a protein often found on small cell lung cancer cells, so it's highly targeted.
And the phase 3 data?
Compelling. It significantly reduced the risk of death by 40% and extended overall survival by over 5 months in patients with small cell lung cancer. For those patients, that's incredibly meaningful time. It could really redefine the standard of care there.
Wow. Any other oncology highlights?
Well, they also mentioned advances with Blincyto. That's another BiTE targeting CD19. They have a subcutaneous version now showing impressive remission rates. And some other bispecifics like zolartamig are moving forward too. So a lot happening in oncology.
Got it. And they also touched on the bigger picture, right? Industry trends.
Yeah, you have to. They acknowledge the ongoing discussions around drug pricing reform, tariffs, mentioning the IRA, the Inflation Reduction Act, and its drug pricing rollout.
Saying they're engaged with government officials, trying to balance affordability and access with, preserving innovation. The standard line, but important context.
Absolutely. It highlights this complex backdrop. You've got the IRA pricing changes rolling out. You've got biosimilar erosion accelerating. Incumbents like Amgen, they have to play defense on some fronts.
Even while they're pushing aggressively on offense with these new volume drivers like Horizon in the pipeline.
It's a constant balancing act. But here's a key takeaway for you as an investor to watch. Amgen's volume growth continues to outperform its peer group. That's a really powerful sign of their operational effectiveness, their market penetration.
Okay, so let's try to square the circle. We have strong numbers, clear strategy focusing on that offensive volume growth, exciting pipeline with MariTide, oncology. Yet, like we said up front, the market reaction was kind of meh.
Right. So what does that tell us?
What's the read on investor sentiment?
Well, it suggests investors are cautious. I wouldn't say alarmed, but cautious. Perhaps they're focusing more on those legacy erosion risks. You hear analysts talk about the Prolia cliff, for example.
Meaning when its patent expires and competition really ramps up.
Exactly. Maybe they're weighing that more heavily than management's quite bullish narrative about sustainable double-digit growth.
Interesting. What did the analysts say specifically?
It was a bit mixed, actually. The buy side mostly called it a clean beat and raise, which usually means the stock should go up. Some analysts, like Piper Sandler, they're still overweight, pointing to the growth story. But others, like BofA, they reiterated an underperform rating. And they specifically cited concerns around that long-term impact of biosimilars on drugs like Prolia.
So it really does underscore that tension, doesn't it, between the current strong performance and those future risks.
Totally. And Amgen's actually outperformed the S&P 500 this year to date. It's up about 17% versus 7% for the index. And it's trading pretty much in line with its large cap biotech peers, around 14 times forward earnings for FY25. So it's not like it's wildly expensive or cheap.
But the Q&A on the earnings call, that probably revealed where investors' heads are at.
Oh, absolutely. The questions analysts asked really honed in on those pressure points.
Like what?
Like their appetite for more M&A, especially in rare diseases. Specifics about MariTide's phase 3 dosing. How exactly will that work in the real world? The timeline for Repatha's big primary prevention study, the evolving regulatory landscape for biosimilars.
All pointing towards that future uncertainty.
Exactly. It all points to investor scrutiny on how Amgen navigates these challenges. How do they convert this volume-led strategy into durable long-term earnings growth while still defending those really important legacy cash cow drugs?
It's not just about today's numbers.
No, it's about the path forward. And there are some big milestones coming up, those MariTide mid-stage readouts in Q4 this year. Tarlatamab's FDA decision, expected in the first half of 2026. And then the next round of Medicare negotiation lists due next spring. These are all big catalysts that could really reset expectations either higher or they could crystallize some of those risks.
Okay, all right, let's shift gears. This is the segment where we put on our slightly speculative hedge fund analyst hats.
Right, and the big disclaimer, this is absolutely not financial advice.
Definitely not. It's merely a thought experiment.
Yeah.
For the sophisticated investor, just something to spark your own thinking.
Okay, so given this backdrop, Amgen's strong volume, the exciting pipeline, especially MariTide, but that sort of cautious market reaction, here's a thought.
Lay it on us.
Remember the pre-call chatter? There was some noise about mixed MariTide tolerability debate.
Right, some skepticism about that.
Yeah. Yet management on the call sounded quite confident in its differentiated profile, that monthly dosing potential, the improved GI tolerability, so the slight dip after hours, despite the beat. Maybe that's some lingering market skepticism, or maybe just broader GLP-1 fatigue among investors,
Possible. So what's the trade idea?
Okay, here's the outrageous but plausible idea for you to mull over. Consider a long position in Amgen.
Okay.
Paired with a highly targeted short position on a competitor's GLP-1 drug, specifically one that relies heavily on daily or weekly injections and has, let's say, well-known or significant GI tolerability issues.
So you're playing the differentiation angle.
Exactly. The thesis is a bold bet. It's a bet that Amgen's MariTide will significantly differentiate itself on that monthly dosing and better tolerability.
And if it does?
It could capture substantial market share from those existing, less patient-friendly options, especially after we get those Q4 2025 MariTide results. The idea is the market right now might not be fully appreciating how much patient persistence and improved quality of life could drive rapid adoption if MariTide truly delivers.
So it's less about just efficacy, more about the real-world experience driving a shift.
Precisely. Think of it as a volatility play on the whole GLP-1 landscape, potentially shifting focus from just how much weight do you lose to how easy is it to live with this drug long term.
Interesting thought experiment. Again, not financial advice.
Absolutely not, just food for thought.
Okay, so let's wrap up our deep dive into Amgen's Q2 2025 earnings call. What's the bottom line?
Well, fundamentally, it was a quarter of undeniably strong financial beats. Really impressive volume growth across a diversified portfolio.
And the Horizon acquisition is clearly adding significant value already.
Definitely. And management, they clearly laid out that strategic pivot we talked about, moving from just defense to a more aggressive offensive growth strategy.
Right. Heavily investing in that robust pipeline, especially MariTide and those innovative oncology assets.
But investors remain discerning. They're balancing those immediate wins against the very real, persistent pressures from biosimilar erosion and drug pricing reforms like the IRA.
It's a complex picture. There's a lot to like, but also clear challenges ahead.
Exactly. Amgen is actively navigating and shaping its future within this really dynamic landscape.
So, as always, this has been an in-depth exploration.
Yeah.
Our goal is to help you get truly well-informed quickly. And remember, none of this is financial advice.
But here's maybe a final thought for you to consider. In this world of, frankly, information overload and incredibly complex healthcare dynamics,
Yeah.
how will companies like Amgen, with this dual-focus groundbreaking innovation on one hand, navigating intense biosimilar competition on the other, how will they ultimately redefine long-term value and sustainable growth?
That's a great question. We really encourage you to think about how Amgen's strategic choices today might ripple out and influence the entire biotech sector for years to come.
Thank you for joining us. We hope this deep dive has given you some valuable insight.
We're always eager to hear your thoughts and questions.